Well, the BOJ is rather missing in action, isn't it? We've seen the most extraordinary collapse in a major global currency almost in recent history. 30% this year, back to 1990 for the exchange rate. I mean, the yen is a serious currency. This is not Turkey, for heaven's sake. This is Japan. But it's all down to the extraordinary policies of Governor Kuroda, who some of us in the industry now are calling kamikaze, because he seems bent on destroying the yen. And his unbelievable infinite put option of 25 bips on his bond positions. I mean, it's an open invitation to every hedge fund in the world to borrow cheaply, short the yen, and make a lot of money somewhere else. In fact, anyone who's making money in the world this year probably has a big Christmas thank you to send to Kuroda. But as for the Japanese people, I think it's a very different story. They're the ones who are on the short end of this stick.
Right. So, James, when you assess the environment right now, what are your top 3 conviction calls? Give me some insight into how you're trading all of this right now.
Well, the yen is a very interesting situation for traders because Kuroda is going in April, and barring a terrible decision, he won't be back. And almost anybody would be better. You could pick a salaryman off the street; they'd do a better job than he's doing. And so it was bound to be a change of policy. I can't imagine anybody else would continue with this focus that he has on inflation at the cost of the currency, which anyway, as it weakens, makes it worse. So the Japanese yen is likely to have a very, very different trajectory 6 months from now. And that will be very, very attractive for foreigners for Japanese assets. Foreigners who bought into the market with AIM have sold out almost exactly the same amount of equities if you take it over the last 12-year cycle, and are actually underweight. So I think positioning now for Japan on an unhedged basis in the equity market is kind of interesting, and that's one of our sort of higher thematic levels. And the won in Korea has sort of had to track the yen because Korean industry is so much benchmarked against Japan, and in spite of the fact that the central bank governor of Korea is trying to do some of the more sensible things, raising rates and so forth, that too is becoming very interesting for some of the same reasons, because the won has followed the yen down.